Let's look at another question. X, Y, and Z are partners sharing profits and losses equally. They decided to dissolve the partnership on the 1st of October 2017, on which date the balance sheet of the firm was as follows. You have your liabilities and you have your assets. On the liabilities side, we're having capital accounts of partner X and partner Y, 20,000, 12,000 respectively. Then you have your reserve fund, which is 6,000, and sundry creditors, rupees 20,260. And we also have an amount of bank loan, which is 5,120. And then on the asset side, we have premises, 25,650, machinery 10,800, stock 8,420, sundry debtors 15,800, bills receivable 850, and we have the capital account for partner Z, which is 1,280, and we also have cash at bank, rupees 580. Now, it's additional information that has been given is the assets realize the following amounts: premises rupees 16,000, machinery rupees 10,000, stock rupees 9,000, debtors rupees 15,000, bills receivable rupees 850, and the goodwill was sold for rupees 2,500. Now, discount amounting to rupees 260 were allowed by creditors while paying their claims, and the expenses of realization amounted to rupees 540. During the course of dissolution, a liability for damages was settled at rupees 9,000 against rupees 7,000 that has been provided in the books of the firm. And they've asked us to prepare the accounts necessary to show the result of the realization and also to close the books of the firm. So generally, when we are preparing the books of accounts that are required to close the firm, we prepare your realization account, your partner's capital account, and because the firm is closing, we'll not be preparing the balance sheet. And additionally, because we're paying also certain amounts, right? We're going to be paying your outside liabilities, we're going to be paying your partners, and we are going to sell off the assets. So we also have to prepare a sub-account, which will be our bank account. So there will be three accounts: realization account, bank account, and also your partner's capital account. So in case of realization account, remember, it is for realizing the value of the assets. We'll record them at the original values when we are transferring them to realization account. And then when we are actually realizing, when we're selling off these assets, we'll be recording them at the values for which we are getting them for. Okay, so let's start by preparation first of our realization account. So let's solve this problem and start with the realization account. Generally, we always start with the realization account in case of dissolution of a partnership firm. Now, you have been given the date also in the question, 1st of October 2017. So make sure you are opening the date column as well and you are recording the date as well. Okay, so 2017, 1st of October. So as on 2017, 1st of October, you are selling all of the machines, you are selling all of your assets and also writing off your liabilities. So the first thing is transferring all of your assets and liabilities to the realization account. So when you're transferring, it's generally realization account debited to assets account and liabilities account debited to realization account. So shall we record the assets first? Okay, so look at your original balance sheet. What are the various assets you're having? So we have to record all of your assets at their book values. So you have your first asset, which is premises. So to premises account, and the amount is 25,650. And then you have machinery as well. So let's record all of the assets one by one. So to machinery account, 10,800, and stock account also. Make sure you're writing the account and also the front and the back. Okay, so 8,420. So don't just record the way I'm recording. Make sure you're writing to stock account, to machinery account, and then to sundry debtors account as well. Sundry debtors is 15,800, and then you have bills receivable as well. Bills receivable amounting to rupees 850, and you have capital account of Z. Capital account is not an asset. It is going to be transferred to the capital account itself. Okay, so next you have cash at bank. Now, cash at bank, cash in hand, generally cash in general, it's not to be realized. Now, cash is already cash, right? What are you going to sell? You can't sell the cash at bank and then get back cash. Okay, it's already basically money itself. So it's not going to be in your realization account. And next also are liabilities, which is a liability account debited to realization. So the only liability we are having, see under the liabilities side, you have capitals for X and Y transferred to capital account. And you have a reserve, which is also to be distributed amongst your partners. Okay, it is already in money form. It's already in monetary form. So you don't have to convert it into cash. Then you have sundry creditors. So let's write down by sundry creditors account. Amount is rupees 20,260. And then you have bank loan. Now bank loan is a separate account and it is not bank. It is amount you are taking in order to purchase, let's say, some assets or to meet some kind of obligations, some kind of liabilities. Okay, so you're taking the money from the bank in order to do something with it. So generally that bank loan is not exactly under bank account itself. Okay, it's a separate account from bank account. It won't fall under cash at bank, neither will it fall as cash in hand. It is a separate account altogether. So it is a liability in itself. You have to give it back to the bank in order to get money from it. So bank loan also will be recorded here in your realization account. So it will be by bank loan account. So bank loan account, the amount is rupees 5,120 from your original balance sheet. Okay, so we've recorded the assets and liabilities at their original values. Now let us sell off all the assets and meet all of our liabilities. So in order to sell off your assets, the assets have realized the following amounts: premises 16,000, machinery rupees 10,000, stock rupees 9,000, debtors rupees 15,000, and bills receivable rupees 850. So all of your assets that you've recorded, premises, machinery, stock, sundry debtors, and bills receivable. You have 5 assets that you've recorded. All of these assets have been sold and we're getting money on it. Okay, so when we're getting money, what is the journal entry? Generally, it'll be bank account to realization account, right? So write down in your realization account by bank account. Okay, so this is the amount we're receiving on sale of assets. So we can just write it as assets realized. Okay, so you can write down in brackets all of the amounts we're getting: 16,000, and then to that we're adding the 10,000 on sale of machinery, and on stock rupees 9,000, on debtors rupees 15,000, and on bills receivable rupees 850. If you want to, you can. If you don't want to, it's no problem. It's understood from the question. But basically, it's better if you show this calculation also. It makes it easier for the examiners to figure out where you're getting the figures from. Okay, so the total of this should amount to rupees 53,350. So on the assets that you've sold, you're getting this amount, 53,350. And besides that, they've also given in the question that goodwill was sold for rupees 2,050. Yeah, so this amount, assets realized, also includes the amount of goodwill that was sold, rupees 2,500, and only then will the sum total be 53,350. Okay, so all of the assets that have been realized, all of the assets that have been sold, we are going to be receiving 53,350, and this includes also goodwill. And then additionally, they've given discount amounting to rupees 260 were allowed by your creditors while paying their claims. Now we have received money, and the next step is generally paying the third parties. So let's pay the third parties. Now sundry creditors are worth 20,260, but we are receiving a certain amount of discount of 260. So instead of paying 20,260, we have to deduct this amount of 260. So finally, we're paying our sundry creditors only rupees 20,000. So let's record this payment of your sundry creditors to bank account. Okay, the payment of your sundry creditors. So we can write it in the bracket also, payment to creditors. Okay, so the amount paid to creditors, remember, the amount is going to be how much we owe them. We have recorded in the original balance sheet, it is 20,260, but there is a discount of 260, so minus 260. And finally, we're going to be paying them only the amount of rupees 20,000. Okay, this is the settlement of the claims of your creditors. And then any other payments that are to be made? No other liabilities. Now let's see if there are any expenses. So in the question, the expenses of realization amounted to rupees 540 that we have to pay. And additionally, during the course of dissolution, a liability for damages was settled at rupees 9,000. instead of against rupees 7,000 provided in the books of the firm. Okay, so during the course of dissolution, while we are carrying out the dissolution process, we had a liability of rupees 9,000. Okay, there was a liability of rupees 9,000, but for meeting these contingent liabilities, we already have an amount of rupees 7,000 which is kept in the books of accounts. Okay, once again, let's read this line. During the course of dissolution, a liability for damages was settled at rupees 9,000. Okay, the bill was paid for 9,000 against rupees 7,000 provided in the books of accounts. Against, that means that is the amount that is fixed. So, the exact liability, the actual liability was 9,000, but the amount for contingency was only 7,000 that was kept. So this difference that is made has to be paid out. Okay, this is an additional liability, so it has to be paid out, and we're paying through the bank itself. So you can write it as to bank account, and this is the additional liabilities. In the bracket, you can just write it as extra payment for damages. Okay, extra payment for the damages. And how do you get the amount? It'll be 9,000 minus 7,000. So I'll just write it in the bracket right here. 9,000 minus 7,000. Okay, and whatever is the balance is what we are paying through our bank account, which is rupees 2,000. This is an external liability as well. And then the expenses of realization amounted to rupees 540. So there's also to bank account. These are expenses. You can write in the bracket also expenses on realization, which was rupees 540. Okay, so these are all outside loans. And we have forgotten one thing. Now come to here. Okay, so we are on the credit side. See, sundry creditors have been written off, right? We have paid off 20,000. Now we have an additional liability, which is your bank loan, 5,120. Now this also, it has to be paid to the bank, right? It has to be paid to an outside source. So we have to pay this bank account also. So next you can just write down to bank account, and you can write the payment of your loan. So to bank account, this is our loan repaid or loan paid. Okay, the amount of loan that has been paid, and the total value of the loan is rupees 5,120. There are no concessions on this, so we have to pay the entire amount, 5,120. So now you can close these accounts and see whether it is a profit or a loss on realization. Generally, there's always a loss on realization. Okay, under most situations that I have seen, is generally always a loss on realization. So the total comes to rupees 89,180. Okay, rupees 89,180 rupees. 89,180. So now we can calculate the balance figure. So, and remember, it's going to be shared amongst your three partners in the ratio 1:1:1, right? Because it's been given clearly that they're sharing profits and losses equally. So calculate the total, or you've already calculated the total. Calculate the balancing. So the balance should be 10,450, and this will be carried forward. This will be transferred to our partners' capital accounts. Okay, this is your loss on realization. You can write it as loss on realization, or just loss is understood from there. So it's transferred in the ratio 1:1:1. So XYZ partner, one of your partners will be getting 1 rupee extra, because this will come in decimal points. So 3,484, and then 3,483, 3,483. Now it's up to you how you're dividing. Maybe partner X can be getting 3,483 and partner Z can get 3,484. It's up to you how you're dividing. And just 1 rupee or 2 rupees difference between my answers and your answers won't make such a huge difference. Okay, so this is your realization account. Now that we have seen the realization account, we can see that there are certain accounts we have transferred to our bank account and certain accounts which should be certain entries, certain transactions which do affect our partner's capital accounts as well. So firstly, let us go to the preparation of your bank account. Now open your bank account. Again, date, particulars, and amount column. Okay, always put your date column because the question also shows the date column. So under the date column, 2017, 1st of October. All right, so in order to do this account, firstly, check your original balance sheet. Okay, firstly, check your balance sheet and see if there's any opening balances. So under the asset side, we have the last entry, which is cash at bank rupees 580. Okay, so this is a balance that is brought forward. So let's record this balance first in your amount column. So to balance brought down or brought forward, amount is rupees 580. Okay, so we've recorded the opening balance, and now let's record all of the other accounts that you're having, all of the other transactions that we've made with regards to realization account. So under the realization account, firstly, when you've sold assets and you're receiving some money, right? Bank account, assets realized, 53,350. Let's record this first. Okay, so in my bank account, I'm going to record the amount on realization to realization account. So to realization account, again in the bracket you can write assets sold or assets realized, and the amount 53,350. So once again, I'll remind you, it's always better to show what is the amount that you're recording. Okay, just it will make it easier for the examiner when they're correcting your papers. Okay, so we have received money, and then after that we paid off, right? We paid the sundry creditors, we paid the loans, we paid for the damages, we paid for the expenses, right? Now let's record all of those. So you can refer back to your realization account for all of this. Firstly, it'll be by realization account. Now, if you want, you can write separately by realization account, and you can write sundry creditors paid, and then by realization account, the loan paid, by realization account, the damages paid, by realization account, any further expenses that have been paid. We can do it like that, or you can club them together by realization account, and below that you can write firstly, sundry creditors paid, the amount, loan paid, the amount, damages paid, the amount, expenses paid, the amount, all within the inner column, and then you can bring it to the outer column. However, I prefer just doing it separately. So by realization account, all the payments made to my creditors, I'll be writing it separately. The payment to my loans also, I'll be writing it separately. So by realization account, firstly, my sundry creditors that have been paid, the amount of rupees 20,000. And further after that, we also have again, by realization account, we have the damages that were paid, right? The extra additional damages paid for rupees 2,000. And then additionally, we have also paid for the loan. So by realization account, again, we can write the loan paid. So this is for loan. This is for my damages. And for the loan that has been paid, amount is rupees 5,120. And then again, by realization account, finally, for the expenses that have been paid, the amount is rupees 540, right? Okay, so now let's go back to the realization account just one more time and cross-check if there is anything else that we have not recorded. So under realization account, the amount to be transferred to bank was bank account, payment to creditors, we've recorded. Payment for damages also we've recorded, bank account. There's expenses also we've recorded, and loan paid also we've recorded. And on the credit side, you have bank account, assets realized, that also we've recorded. So based on this, now we can see that this bank account is completed and we can transfer the amounts to our various partners. Now before that, we can't close the bank account. Remember, when it comes to bank account or even cash account, it is generally the balances from the partner's capital account that will be transferred here. Okay, the payments that are being made to bank account or to your partners, that will be transferred to bank account. So bank account is usually always the last account that is to be closed in case of dissolution, because final payments that are to be made. So when you are actually preparing the necessary accounts with regards to dissolution, you can first prepare realization, and then you can prepare the partner's accounts, and then you can prepare the bank account. It's up to you which order you are following. Okay, so let us move to your partner's capital accounts. Prepare your partner's capital accounts, and then here also, date, particulars, and then your partner's amount in rupees. Always make sure you're putting the amount or the rupee symbol next to your partners. Okay, so while preparing the partners' capital accounts, firstly take into consideration the opening balances if available in the original balance sheet. So in the balance sheet, you have capital for X and capital for Y under the liability side, and you have capital for Z under the asset side. So let's record these capital accounts first. So remember to record the date 2017, October 1st, and then by balance brought down. This is only for partner X and Y. So you have 20,000 and rupees 12,000 respectively, and Z will be nil. And then on the debit side, we'll record the capital for partner Z. So to balance brought down for partner Z, the amount is rupees 1,280. Right, and then in case of the balance sheet, we have recorded all of your assets, right? Premises, machinery, stock, sundry debtors, bills receivable. We've also taken into consideration the capital of Z and the cash at bank. Now on the liability side, you have capital for X and Y, which you've recorded, sundry creditors also recorded, bank loan also recorded. Now we've missed out on a liability, which is your reserve. And remember, in case of reserves, in case of any undistributed profits, we generally just pass it on or distribute it amongst your partners. So let us distribute this also. We'll treat it in the same way. So by reserve account. Now, in case of reserve, it will be distributed amongst all of your partners in their profit sharing ratio. So the profit sharing ratio here is 1:1:1. So divide 6,000 equally amongst your three partners. We'll be getting for partner X rupees 2,000, partner Y also rupees 2,000, and partner Z also rupees 2,000. So now check the balance sheet once again. We've recorded everything under the balance sheet, correct? Okay. So now go to our realization account. Remember, in case of realization account, you can get profits or losses which will be transferred to your partners, right? So here under realization account, we have one transaction which is relating to our partners, which is the transfer of realization account loss. Okay, so let us take this loss and transfer it to our partners capital account. So come back to the partners capital account and record the loss to realization account. To realization account, and you can write in the brackets also loss on realization, and record the amounts will be 3,484 for X or 83 depending upon how you've divided, and the same amount for your other partners, 3,483 for partner Y and Z respectively. So we've recorded everything, we've transferred everything. Now let us close your partner's capital account and see if the amount has to be paid from the firm to the partners, or if there is a deficiency in which the partners have to pay the firm to cover up for the deficiency. So let us close these accounts first and get the sum total, and after that get the balancing figures. So closing down these totals, for partner X it is 22,000, and for partner Y the total is rupees 14,000, and in case of partner Z, my debit side is more, 4,763. Okay, so let's close it. There's a surplus and there is a deficiency. There is a surplus for X and Y, so it'll be paid to them through bank account. So to bank account, amounts are rupees 18,516. This is your balancing figure. And then for partner Y, we're having the balancing figure of rupees 10,517. And in case of partner Z, we have a balancing figure by bank account. Okay, so the amount we're getting for partner Z is rupees 2,763. So now we've calculated and we've received the balancing figures, and these balancing figures all relate to the bank account. So now we have to move on to the bank account and record those figures that we've received from the partner's capital account. So under your bank account, it'll be, in case of partner Z, it'll be to Z's capital account. The amount you've already calculated. The balancing figure was 2,763. And in case of partners X and Y, you can write it as by partners capital accounts, and below that you can write X and Y, or you can just write it separately this way. By X's capital account, the amount is rupees 18,516, and also by Y's capital account, amounting to rupees 10,517. Okay, so we've made all of the payments to our partners also. Get the total and make sure the debit and the credit side are going to be balanced in your bank account. Now, if your bank account is balanced, that means all of the calculations that you've made are all correct. All of the entries you've made are correct. So it should be 56,693. So make sure you're doing the calculations once again, cross calculation, just to ensure that the figures I'm giving you are accurate. I may be giving you the wrong figures. You don't know until and unless you do the calculations yourself. Okay, so do the calculations. Make sure you're getting these figures.